Hi everyone, this is Rob Roy of Elliott Wave Options and welcome to this edition of the U.S. Market Update. I wanted to thank everybody that's been watching. We started this about a year and a half ago, posting these videos. If you find these videos entertaining or informational or educational at all, give us a like, put us on there. Well, in the last recording, we kind of had a little fun with the fact that my spidey senses were tingling, that something was about to happen. It was because we had an upward ascending pennant pattern, not in my opinion as strong of a breakout pattern as a triangle, but still something that a lot of people look at, and we were getting smaller bars with lower volatility, especially intraday volatility. And usually when that happens, you tend to get a breakout one way or the other. And then we had some comments come out from Mario Draghi of the ECB, who said that, well, we stand ready to do whatever it takes to help the markets. The last time he said that, he said the exact same thing, and the market rocketed higher. This time, the market went down, which you'll see when we look at the charts, because even though we made those comments, the ECB didn't cut rates. So they didn't cut rates, which the market wants, because the market is addicted to this free money, these easings from central banks. And so hopium, whatever you want to call it, liquidity heroin, there's all kinds of little catchphrase names out there for it. But the market broke down a little bit, but then it turned around and went right back up as we are heading towards the Federal Reserve's July meeting, when there is great anticipation that the Federal Reserve is going to cut. Now, at least 25 basis points seems to be baked into the cake, but now there's a little speculation and some uncertainty about whether or not they might go 50 basis points. I think that's calmed down a bit, but even a 25 basis point cut would be okay because the GDP number came out okay. I mean, the market's not doing as bad as people thought, and the economy's not doing as bad as people thought. Has it slowed a little bit? Yeah, but not as much as people thought. The earnings season has gotten off to a decent start. Nothing super robust, but better than some people had feared. So let's get to the charts and you'll see what I mean. So here's a chart of the S&P 500, and I'm going to go back and remind you of that ascending triangle pattern that we had, and we went right up to that little point. And so that was showing that we had this consolidation that was occurring. And again, a lot of people look at pennant patterns, they look at flag patterns and triangles. To me, I try to stay focused mostly on the triangle patterns because I think they're the more powerful of the breakout patterns. And then here we got Draghi's comments, and we had this big down day. And then we've turned around and recovered all the way back up to what would have effectively been just a continuation of a slow, steady climb up through where that pennant pattern was. And if you've listened to any of these recordings over time, and a lot of you have, which I'll get to in a little bit, you know that it's been my view for quite a while that we did need to go make these new highs. We've been talking about this way back since June, that the market needed to make new highs because there just wasn't enough retail trading public participation in this market for the institutions to make their gains, and we need to make the new highs, get it all over the media to where the retail public says, oh no, we're missing out. They come in, then the institutions look to take profits. We're getting there. Are we there yet? We're not. As far as Elliott Wave says we have more to go to the upside, but not a heck of a lot more, but more to the upside. And I think that that kind of coincides with the same theory that you need to have more of the retail public in before the institutions have enough room to take their gains and get out. So I think it's likely that we could move higher. Now, whether or not we get that 50 basis point cut next week, that's up for debate. Personally, I don't think they're going to go 50 basis points. I think they might have, but now the data has started to come in to show the economy is not really that bad, and it's even getting to the point where some are questioning, why does the Federal Reserve need to cut at all? But I think they're backed into a corner. I think the 25 basis point cut has to come. I don't think they're going to do the 50, so that's going to be interesting to see. How does the market view that? Does the market take that as a good thing, that we're cutting rates? And that this rally can continue, or does the market get disappointed because now we've been anticipating 50 basis points, and only a 25 basis point cut is disappointing. And it's amazing where we've come from the fact that we were raising rates just 6 months ago. And now we're looking for a 50 basis point rate cut. So it's fascinating with where things have gone. So we'll see. But so far, we've gotten the new highs. We've gotten what we thought was going to happen. I just think maybe we need just a little bit more. But we'll see what happens going into Wednesday, because that could change everything on Wednesday. I wanted to show you, we've been looking at these charts, so I wanted to update these. The Russell, the small caps, have not really done anything in the past couple of weeks. Just dead sideways is all we've done here. And there's a lot of people that believe that for an overall market rally to continue, you need to have the small caps in concert with where the market's going, that some people view those as being leaders. And also in the semiconductor stocks, which is the shake my head stocks, I call them, because the symbol is SMH, for the ETF, shake my head. So if we take a look at that with the Elliott wave pattern, now we see something totally different. We look back and look at the small caps with the Russell, and we're just going sideways. We're consolidating in this wave 5. But when we look at the SMH, we've relabeled to a wave 3. We're in a very strong move to the upside here. And if we add volume into the mix, then you get to the point where you're saying, well, not maybe as much volume as we would like to see. We know that we never get as much volume on upward moves as we do on downward moves. You can clearly see that here when we were moving to the downside, where we had all this extra volume here. You never get as much volume on upward moves as you do downward moves, but you want to see at least average volume start to come in, especially as the SMH is now making new highs. But right now we're consolidating those new highs. If we move back to the upside, if the market likes it, and maybe the Federal Reserve does shock with 50 basis points, whatever happens there, if the SMH continues higher with the semiconductors, that is typically a pretty decent sign for the economy when the semiconductor stocks are moving up, because it shows business is happening. That's why it tends to become such a good indicator. So the fact that we're in a wave 3 with the SMH now has to be viewed as a good sign. It can't look at anything. It can't be viewed as anything other than a good sign. So let's take a look at the VIX, because now here we are again. We're back down to another big, large descending triangle. We talked about this last time when we had this triangle back over here in this area. Right there, we had a descending triangle, and there were a lot of pundits on the markets, the financial networks, that were saying that no, we can't break to the downside here. There's not enough room because the VIX is so low. We're obviously going to get an upside breakout of the VIX. And that means normally when you get an upside breakout of the VIX, when volatility increases, that's a downward move in the market. But it was my view, again, if you watch the recordings, that no, there was room to the downside. So we came down, we broke back up, we tested the breakout. So we broke down, and here we are with the test right here. And now we're back down again. But remember, even though we're at this strong area of support, granted that is a very large area of support, we don't have to go back all that far to realize that the VIX got all the way down to 9. So could we go a little bit lower from here? We could, but what this is showing with this big triangle here is that we have to be very cautious of the fact that if the market views, if the Federal Reserve were to come out and not cut at all, I think that would be disastrous for the market. So that's why I think that they have to do at least the 25 basis points that's expected. Now the whole 50 thing on how that's viewed is up for anyone's grab as to how the market's going to view that. So this is a point where you need caution. So yellow lights, flashing yellow lights, caution time right now. We have gotten the new highs in the market. I still don't think it's quite enough, but we are at new highs, and we've had a lot of media attention for that. So Could we have a downward move? We could. So this is a point where you would be looking at protecting yourself, have some downside protection and upside trades, or have like the strangles that we do for our subscribers, where we set them up out of the money strangles that mathematically are designed to generate money as fast as possible, but they have the downside protected. Something along those lines that would allow you to participate to the upside if we were to move up and hit this upward move here, or if it becomes viewed as something very disappointing to the market and we get a big spike in volatility back to the upside. So we have some dichotomies here. So we got the Russell doing nothing, but we got the semiconductors that are showing strength even though they're consolidating at the new highs. We've got the market at a point of waiting to see. Very interesting times in the market. Again, thank you for your viewership. Hit subscribe button if you'd like. It doesn't cost you anything to do that. And if not, please hit the like button. Appreciate it very much. Thank you, and look forward to talking to you again next week. Take care, everybody.